Hey folks, Dan Frio here with your closing bell for June 17th, 2025. What a wild ride today for only a 0.03 reduction in rates. So let's get over what happened today or the news that we have coming out. The Federal Reserve's coming out tomorrow and they're going to tell us what they're going to do. I'm going to be breaking news. I'm going to give you this today already. But what we want to focus in on is the other stuff that they're concerned about. One of the major things they're going to be concerned about now is right through here. Trump weighs potential U.S. military strikes on Iran. He demands unconditionally surrender. So is he going to get that? Well, if he doesn't get it short term, this is going to play a major role in what happens to these things over through here. So that's what we're going to focus in on today. So folks, my name is Dan Frio. I actually do this report twice a day to inform you guys what's going on with these things over here and the whys behind it. So the Federal Reserve's meeting tomorrow, they're going to do nothing because there's a 90-something% chance that they're not going to cut rates. But now this might throw a little bit of a monkey wrench into it because if we start military action on Iran, would that cause investors to flee to safety? What do I mean by that? Well, let's get over to it. What you mean by fleeing to safety is this. If we were to go in conflict with Iran at this time, the most likely event, if the U.S. declares war on Iran, the most likely outcome for interest rates is short term is to decline due to a flight to safety. So what is a flight to safety? Well, basically it's this. Investors typically move their money into U.S. Treasuries and other bonds during this time because they want to get out of risky assets. So let's get over to the stock market. Stock market's down 300 points today. Well, that's a check mark that it's fleeing to safety, maybe, because these markets have been basically crazy throughout the last even couple years. But are people moving over to bonds? Well, let's see what the bond market's doing. No major changes there either. So maybe people are just holding off or putting their money into gold. Well, it is up $6 a share, so nobody's doing anything there. So the only thing I can think of for this is people are just holding off because it's very, very short term. You don't want to get into the bond market at this time because if the Federal Reserve comes in and they say, we're not cutting rates at all because of this, you're going to see the prices of bonds basically going down, driving the yields up, and that's not good news for bond investors. So right now, people are moving their money into bonds, especially mortgage bonds and Treasury bonds. They're just waiting for something to crack to give us some direction on, is all these conflicts going to be long-term, short term, because that does weigh in on all the decisions on interest rates. So right now, here's what we're seeing. People are moving, they're not moving their money into gold. They're moving their money out of the U.S. Stock market because we have all four indices down. We have the VIX up 13%. That means the markets are just on almost panic mode right now. So what are they waiting for? They're waiting for the Treasury to come out tomorrow and tell us what exactly they're going to do. And they're also going to be on standby to see is there going to be military strikes by the U.S. And if there is, you can see a much more deterioration in the stock market, and you'll see a good reprieve in interest rates because people are going to move finally their money into hopefully treasuries and mortgage-backed securities. So the reason, again, why they might not do that initially is because if treasury bonds, if their prices go down, then rates go up. So what investors aren't going to do is they're not going to want to put their money into bonds short term and then see the prices deteriorate. And then if they need to sell out of their position quickly, they're going to lose money. So right now, most traders are probably just sitting on the sideline to get some direction from the Fed and some direction from there. So as soon as we get that data, I'll be able to fill that void into you and give you an idea where rates are going from here. My expectations, I'm getting a lot of questions today. Dan, should I float or should I lock? I'm advising my clients right now to float. I hope I'm right on this one because I think this is going to be short-lived right through here. And I think when the Federal Reserve comes out tomorrow, we're not going to get good verbiage from this because of the uncertainty here with the tariffs and with the new tax bill. But over a longer period of time, say 60, 90 days out, I think you're going to see nice reprieves in a lot of the market and the rates are going to continue to deteriorate from here. So that's what my expectations are and the whys behind it. Let's get over to the economic calendar that we have. Basically, the only data coming in tomorrow before the Federal Reserve comes out and tells us what they're going to do is the initial jobless claims. Well, this is one of the biggest pieces of the puzzle that the Federal Reserve is also continuing to monitor. They've been monitoring inflation by the PCE. It's been dropping and dropping and dropping. It's actually 0.1% higher than where they want it to be. So that's on point. We also have the jobs reports. It's actually our unemployment numbers are at 4.1 and sticking there. So we're going to pay attention to how that continues to rally through here. And then we're also going to, like I said, the most focus right now, folks, is right through here. So if you see this escalate, You're most likely going to see deterioration in the stock market, but it will be good news for bonds and it will be good news for mortgage rates. So that's what I'm expecting right now. I'm expecting this to be kind of short-lived to a point, and more people just get comfortable with it. I don't want, major changes one way or another, but that's the reason why I'm advising my clients to float if they're needing to lock in the next 24 to 48 hours. So that's the report for today. Make sure you come back tomorrow because we will also have a live event during the Federal Reserve meeting. We know what they're going to do. We don't know what they're going to say. That's the biggest key points that we're going to focus in on. So now on to me. Who am I and what do I do? So my name is Dan Frio. I actually do this report twice a day and inform you guys on what's going on with mortgage rates and also mortgage programs. I'm actually a federally licensed mortgage loan officer, so I'm licensed in all 50 states as well as Puerto Rico. But our bank is unique because we're set up with 33 other lenders. And you might say, Dan, you're a bank, but you have 33 other lenders. Why? Well, we're trying to help you. So if you're out there trying to navigate buying that first house or refinancing, you want the most options you can, right? So you usually put in your application here and there, 3, 4, 5 different companies. What if you could do that all under one roof? And our slogan, one application, one credit pool, we're going to shop your loan over 30 different lenders. So that's what we do in the background. So if you want to find out more about this and how we do things, just visit us at therateupdate.com. You can reach out to us at the phone number right here at the top, or you can even ask me a question right through here. Just click Ask Dan. Ask any question you have. Please include your name and phone number. I'd love to reach out to you and talk to you. We did add a new video in here, our new conventional one down program. It's for first-time home buyers or even repeat buyers that are looking to put down 3%. We can actually give you 2 of that 3%. So it only requires 1% of your down payment, and it's up to $7,000. So check that out and see if you qualify. We actually had a lot of people applying for this today. So that's our report for today. Like I said, folks, I'd love to reach out to us if you need any help when it comes to a mortgage. Thanks for watching. God bless. Have a fantastic evening. Be safe out there, folks. And I'll be back here at the opening bell tomorrow to let you know how all this mess starts another day. Take care, folks. See you tomorrow.